Now we are.
We're live. Okay, we're live. Wait,
Hold on. Let me get
we
the
live
ticker going.
are we live on the page?
We should be.
Wait, let me see.
Let's double check that as well.
Yeah, we're live on the page.
Yeah?
Yeah,
Perfect.
yeah.
Oh,
What does RMO means?
that's the whole restricted movement order thing.
Oh, okay. I'm so in my cave. Okay, anyway, yes.
All right, so the chat's also open.
Okay, chat's open. Everything's open.
So I can see if people respond on the pages and on the YouTube side of things.
Yeah.
And
that's good.
Post here, I see people joining. If someone can just leave a comment for us to know that everything works.
Morning. I mean afternoon. Wait, let me see if I can shout out in the group. Okay. Can I share on my
Perfect.
page?
Whoever this is says yes.
That's good.
We're good. Okay. So welcome, guys. Don't really have anything to really talk about, but besides stocks, I guess. So Reggie, I don't know if you actually if you knew what I actually wrote in the. Did you look at the description?
No. What do you write? Wait. What do you write? How do I see the description again?
You have to go to your Facebook page.
That's good.
Essentially, I took a riff off the "Let's Talk About Sex" song. I said stocks, baby. Let's talk about you and me.
Okay. Cool. Let's do this. Bad things that you may be. Let's talk about stocks. Okay, so everything about stocks today. Cool.
Yeah. So before we really dig into stocks, let's just make sure that people are aware that we are not any sort of professional advisors. We're here just mainly for entertainment, to share about our own thoughts and opinions. Nothing here is, it should be taken as advice of any sort. But feel free to do your own, diligence and all of that after hearing all of it. And as always, let us know what you think, or if there are any companies that you're also interested in looking into, let us know. And if you are interested in popping on the show, we can also get you to do that, because we can fit up to 6 people here. So we can have 4 more people share their thoughts and opinions about companies that they might be looking into, or questions that they may have as well. So anything else you want to add there, Reggie?
No, it just sounds a little sad that we're just entertainment. It's okay. I get it. Entertainment, yo. Yeah, that's it.
Cool. Yeah. All right. So stocks this past week has been quite a roller coaster.
Past 2 weeks, actually.
Yeah, past 2 weeks.
It's been crazy.
What was I going to say about that? So I was actually kind of curious as to, what happened, or at the beginning of of yesterday's trading day. I was like, oh, wonder why every exchange has picked up significantly. The losses from the day before, and I was like, oh, maybe it's because yesterday was the third Friday of the month. You know much about that?
No, tell me what's the third Friday of the month?
So the third Friday of the month is usually the default expiration day for all stocks, all options.
Options. Okay.
Just asking this with this person here. Are we talking about U.S., Malaysia, Singapore stocks in particular? Primarily, the stocks are being traded in the U.S. So we will talk about other things as as if there are any questions, feel free to leave them in there or whatnot. We did talk about a few different Singaporean
Chinese
stocks.
Yeah. We could always build a list, and we can always get back to you. All right. Yeah. So if you have any stocks in particular, any ticker in particular, you can just write it. We'll do what we can. Yeah.
Yeah.
Anyway, we're for entertainment only, right? So.
Yeah.
Yes.
Yes. So that said, being the last or the third Friday, I think a lot of people were, covering all their options, and at the same time, I'm not sure how. I don't think there are any like limits to shorting a stock or like how when you must cover by. But I was thinking that was like the initial reason, but who knows? There's no real rhyme or reason for anything these days. Yeah,
It's not confuse causation with correlation. Yeah.
definitely.
Yeah, it's a lot of people do that. It's like, oh, because the clouds are moving, that's why the sky is blue, whatever. Fuck. But yeah, you get the idea.
Yeah,
Yes.
yeah.
Mm-hmm.
Anyway, so let's just dig right into this. Are there certain companies that you are interested in like talking about today?
Certain companies. What did we talk about yesterday? Tcom. I think let's do some tech companies.
Tech?
All right. So
Sure.
I think there are some growth tech companies that are pretty good.
Actually, before you even get to like tech companies, so the challenge is as someone who's trying to pick up like the value investing type of framework, right? You really focus on understanding like the discounted cash flow, right? And kind of coming up with a value based off that. With growth companies, tech companies in particular, most of these guys are like very, 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 very negative, right?
Yes,
But at the
yes.
same time, like, companies like a Tesla, for example, have gone from
Tesla.
200 to 800 in like 2-3 months. How like
I think there was this
what's the justification for something like that?
There's no justification for something like that. So
Okay.
I think Tesla went from like 200 to 800 in a week or something. Wait, let me go to Tesla.
Yeah, I'll pull up
Tesla.
Tesla for us all to share, and make sure we're all looking at the same graphs. So let me just and share my screen here like this. Boom.
Okay. It's not like I remember there was one week that it just flew.
From 650 to 8 or 900 almost.
Probably
in like 2 days.
Around there. Yeah, it's crazy. It's like Bitcoin. So I think a lot of people we need to, when you look at a stock, you need to realize that there are two components, right? One is the stock price, one is the underlying business, right? So I think that is where a lot of fundamental investors we look at, right? We look at the business rather than solely just the price or the price movement, right? So when you look at companies like Tesla, which are like growth companies, trying to benchmark a market, trying to like disrupt a whole market.
Yeah.
The challenge comes as to how do you value something like that, right? And yeah, it is super complicated. A lot of your DCF models, they don't really work unless you separate it out, and that will make the whole. Okay, the problem with DCF is that, how do I put this? The problem with DCF is it can be oversimplified. Like these days, a lot of people are too simple about it, right? It's just you just plug some numbers and then there's this like magic number that comes out at the end, and then bam, okay, that is the price that you buy, or that's the price that you don't buy, or whatever, right? So the challenge with that is that you look at all these big banks and big financial companies, they hire a whole team of people to analyze companies, right? They don't just use one formula to do this. And if the model becomes too complicated, which means like I'm assuming that Tesla goes from negative to become profitable, and then I'm assuming that they will bring down their cost of production because of scale, and then I'm assuming that they will continue to rise at 20% or 30% sales year on year because of expansion in China. I'm basing off three assumptions.
Yeah.
All right. So then that makes the model super complicated because I need to hit point 1, point 2, point 3 before the whole thing works. All right. So when you're investing in growth companies or investing in disruptors, then there is a good amount of faith that needs to come in this game. Yeah. And most analysts are super biased in this game, right? So you have analysts saying that this will be like $6,500 stock, right? I think Tesla. Someone was saying that $6,500, And you realize that the people that are most extreme, they get onto the media, right? They go on the news, they invite them and they talk. So that is the game of the news, right? The business of the news. So when you look at it objectively, sometimes I really question how do they like project 6,500. No, they don't really publish like a full report, talk about their breakdown, and because a lot of things like PNC, right? So yeah, personally, I'm not a fan of Elon Musk. I don't like him because he always says this and he like delivers this, right? So it's like always under deliver, over promise. You can say that Tesla is a revolutionary company that is doing, like new kind of cars. So be it, right? If you're a believer, go ahead. I'm just not a believer. I think there are other better places to deploy my money, right? Ultimately, you choose where you're comfortable. You gotta understand the business, and you gotta do what you gotta do. Yeah.
Okay, well, like I guess that's a great segue to what's one of those tech companies that you are comfortable with? Let's pull
TTD,
that up.
man. TTD, the
TTD.
trade desk.
Oh, explain to people what the trade desk is about.
Essentially, it's an integrated advertising platform, right?
Okay.
So you realize that these days there are like tons of ads all around, right? That you can advertise on the games, you can advertise on like TikTok, you can advertise on like Snapchat, Twitter, everywhere, right? So most big companies, so small companies will try to do everything on their own, right? And they're not the main kind of people in this business anyway. So then there is the other two bunch of people, which are your advertisers and your huge ass companies that advertises a lot, right? So your advertisers, they can be taking on small projects from all these different companies, mid-sized companies that want to advertise but don't have the expertise to do it. So then they get an advertiser to do it. Or they can also take projects from big ass companies that, want to engage them professionally to do their thing. Or you can have big companies that have a team in-house to do all the digital marketing outreach and everything. But the complexity these days is very significant because it's no longer just Facebook, no longer just Instagram, no longer just YouTube, right? So TTD does that one-stop integrated platform where advertisers can go in and just kind of buy all sorts of ads, right? So it's this integrated platform. Essentially, that's what it is, right? They don't own advertising assets. They just kind of, build this platform for you to make advertising easy, right? And in the advertising community, in the branding community, it's like the top 3 platforms. Many people are on the platforms, right? And they're growing, fast growing, and I think they have like minimal debt. The last I remember. Let me check. It's too much information.
I'm also sorry. What do you say?
Too much information these days. I can't remember everything. But yes, TTD has like. Wait, I'm on Guru Focus. Give me a moment.
Do you want to share or you can share your screen here?
I'm on another screen. Yes. So if you go to, I use Guru Focus, GURUFOCUS.com. That is like an integrated financial kind of platform. So yeah, they have no long-term debt. So I think that is amazing.
Hold on, let me just pull up the screen so then we can all follow along here.
Want to play puts or TIV like counters, but don't play puts, bro. Those are like options stuff. Someone's comment. Options are really complicated.
So what was the person saying? Let's make sure we're all.
Yeah, that's a good platform. 30-year financials.
For those who might not understand what that person was just saying, can you help break it down?
Like puts?
Yeah. What's puts? What's TVIX?
Super complex. Wait. Essentially, these are derivatives, or these are options. So you're trying to speculate the market in some way or another. So you're trying to speculate that the market will not go above a certain price or will not come down beyond a certain price. So that's the difference between the puts and the calls, right? And how I describe to people is like buying insurance. So when you buy insurance, what happens? You pay a certain amount of money, and if something happens, you are kind of insured from the effect of it, right? So so in the case of a stock, if you're buying a certain option, that means if you buy the option at $150, if the stock comes down below $150, you still your maximum loss is still $150, because whoever that sells you the insurance already received your premium and you're protected from that minimal price.
Yeah.
Essentially, that is what options kind of do, right? So some people buy options, and then the other bunch of people sell options, right? So these people take on the risk of price fluctuation, and I do a little bit of options, sell a little bit of options, and wasn't great the last 2 weeks. It's a bit crazy, but we're making money back because now it's a volatile market. But this is like super complex. You gotta manage your margins, you gotta manage your risks, reward percentages. If you are new, just don't do it. Yeah, because if you ask this kind of questions, then chances are you're a retail investor. Don't do it, because they have like a whole team of people that does it. I just do like a small little portion. Most of my portfolio is still equity long terms. Yeah, so I think that's where it is.
Yeah.
Minimal options, guys.
And then for the TVIX,
I don't know what is TVIX. Wait,
yeah,
what
so
is
TVIX is pretty much the
volatility?
volatility index.
Okay, so volatility.
Yeah, so I can kind of take over here. So
Cool.
the issue with, or one of the things that you have to kind of keep in mind with when you're dealing with something like options is one of the main factors of how an option is priced is based off the current volatility of the market, right? So in this scenario, with the volatility like crazy high, your options are also going to be very, very, very expensive, right? So to even get in, especially if you're just like going against or like selling options and taking their insurer's route, is probably not the best. I mean, you can get that premium, but at the same time, you could also be faced with huge consequences, right?
You can do a spread. You can do a
Yeah, we're not
spread.
getting into
All
that.
right, but we're not gonna go to fuck complex shit. Okay.
Yeah, but for most people, they're looking at like buying a put in the scenario. Then you're paying a huge premium, so you need to also have it move a lot,
Yes.
in order for you to actually justify or even potentially like make money here. So that's definitely not something I would suggest for people here. Definitely.
Yeah, don't do that. The VIX in the long term is a downward movement. Tends to be the case, right? Because it's not every day you get coronavirus with an oil crash with like lockdown, and it's like a combo move, right? Not every day you have combos. So in the long term, it should decline. People should be more comfortable because the VIX essentially measures volatility, measures fear. So the market should stabilize and the VIX should come down, but that is a should. You don't know what's gonna happen to come if a few countries raise that they're gonna get bankrupt. Some shit happens in the EU, then the VIX can go up again. But in the long term, in like a year or two, 5 years, 10 years, the VIX should tend to come down in a few years. All right, that's the trend down.
Anyway, so let's go back to TTD here. Am I on the right page that you were talking about?
Yeah.
Okay.
Yeah. TTD. You go to the search bar.
Yeah.
TTD. You put TTD again, like that left-hand top search bar.
TTD.
Yeah. Then it drops down 30-year financials. Yeah. So I think this. Yeah.
It opened a whole new page.
Okay. Yeah. I think you can click into 30-year financials somewhere. I can't remember. Yes.
Yeah,
Okay. Cool.
Yeah.
So I think the platform is pretty good. For a free platform, you get 5 years kind of data that comes. They kind of aggregate the data, so it helps. It allows you to see a certain trend. Another platform that I use is Macro Trends, but that is another time. We look at TTD first. So you see revenue per share trending up. That's good news. You see revenue continue to grow very significantly, actually. All right, so it grows at about 40% a year. right? So that is super exciting, 30-40% a year. And they have no debt. I
But
think
where is that?
under cash,
Oh,
wait, should be
debt
the
per
balance sheet.
share is supposed to be 394 right now, according to this.
Long-term debt. Go to all the way down to balance sheet.
Cash equivalent, current
That
assets,
long-term
assets.
long-term debt.
Okay, so here's current and the long term is right underneath.
Yeah. Do you see long-term debt?
Yeah, no long term debt.
Yeah, so that's good. I usually only look at long-term debt because short-term kind of liquidity leverage is, to me, is no big deal, because the long-term debt is what usually sucks up a lot of percentage in terms of companies, right? So average they pay about 7% corporate debt rates. Depend on the health of the company, depends on what kind of rates they can get from the banks or from institutional investors. It's a complicated thing. You can read through the financial statements to see it, but I think very important, we got to look at the absence of long-term debt. That means that the company is not taking on massive kind of loans and debt to expand or do M&A or to grow their business, whatever. So that's very good, especially in a time like this. Right, in a time like this, I think TTD will shine. You will see more and more people trying to be more effective and more efficient with their advertising dollar. They will probably run less, huge ads like bus ads or like banner ads. They will want to be more targeted, community driven. So you should see advertising move more and more towards a digital front. And with this whole like Corona thing, more and more advertisers will go digital, and more ad dollars will go into the digital ad space, right? And I think they are great business in this part. Yeah.
Cool. Awesome. Yes, so just for those who might be just joining us, please note that this is not professional advice of any sort. We are just doing this for entertainment purposes because everyone's kind of stuck at home, so nothing better to do.
Yeah. I was just planning to record some new episodes, and then you're like, "Oh, let's go live at 12." So, "Oh, okay, let's do it."
Yeah, and we do have. And for those who are also joining us from different channels, so our primary channel right now is the Facebook group, Personal Finance, blah 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 Malaysia, or Investing in Personal Finance Malaysia. But we are also live on a few different pages. So if you are messaging on pages or on YouTube, we can still see you here. So please keep us, just please keep up with us here and let us know what your thoughts are. All right.
Someone's asking. You were using FA to analyze the stock, which is great at telling what to buy. What do you use to figure when to buy? That is the question, right? So I think the challenge with evaluating growth stocks, okay, it'll be much easier if the company is like huge, right? And it's you can use PE ratio, you can use DCF. A lot of traditional valuation models, they work when the company is big, right? If you're evaluating like Coke, Nike, Starbucks, these companies are huge, and you will very unlikely see them grow massively, right? Maybe they will try to grow in other ways, like Starbucks is trying to go FMCG. They're trying to do like bubble tea kind of structure. If you have not found out, Starbucks, I think they're doing a Starbucks Now or Starbucks Go kind of brand. Just go and check it out. They're trying to emulate like Tea Life, and they already started in China, right? So in due time you will see them appear in every part of the world, and it will be it's a great remodeling of that business, because they are actually trying to do more delivery, right? And small businesses, small outlets allow them to do that part. So they lean down their menu and set up something like a bubble tea shop for Starbucks, right? So these kind of growth potentials are interesting, but they already have a big base in their business. So it's a lot easier to evaluate them with DCF, discounted cash flow, or like PE ratios for these kind of companies. For growth companies, it's a big question mark. How do you want to do it, right? So the best bet will be mostly to just try to buy when it's cheaper, when the market is like half at this point in time. I think it is okay to buy at this point in time, right? But that doesn't mean you buy everything. I think the challenge a lot of time is to how much do you buy, right? So at what point in time do you buy, and is that the only buy, right? So if you have $1,000 and you want to put it to TTD, you can put $300 first. And then you observe and you see that they're growing, and then if it's continue, it's good. You can add a little more, right? So some people use price to revenue, price to sales. Depends on how you look at it, right? But I come from the ground that I want to find a technology that has two things. One is it is so disruptive that you don't see a way of going backwards. You can only go forward, right? And number two is that there is a path to profitability, right? It needs to be profitable, right? And from that point of path to profitability, then we can look deeper into like how do you then evaluate the intrinsic value of the business, right? But a lot of models they will crash at this point in time. They just don't work as well. Yeah. So a little good faith goes a long way.
Yeah, and I guess kind of adding it to like when to buy. I mean, the way I look, or the way I'm planning my own money is I'm almost like unlocking a set amount or a set percentage every week in a sense, right? So similar to, how you should always be like dollar cost averaging long term. You should like for things like this, you should also kind of be dollar cost averaging in a sense, right? Like, this week or the first 2 weeks I unlocked 20%. Because there are definitely opportunities there, and I will only take the ones that have the opportunities. The rest of them are like, the rest of them are things I'm keeping an eye on, but I'm not actually acting on just yet, right? And then next 2 weeks or whatever, if things continue the way they are, I might be like, okay, I'll let myself go out for another 20%, 20%, whatever it is, right? So I guess it's also like a function of time of having a game plan for how you're actually going to spend your money, and then knowing that for me, as more like trying to stick with the value investing type of thing, having like a clear okay, first hurdle is if you get to this point is potentially like, okay, I can start looking at like buying you, right? And then if you go lower, then I'll continue buying a bit more, and so on and so forth.
Yeah, I think there is it's almost impossible to time the market, right? And I think it's just very difficult to time the market. Don't try.
So then there's another question here, just kind of going back to TTD.
Dividend power, asset strong, growth, dividends. Growth, definitely growth. A way to separate business is asset strong or growth. How do you look at TTD from these three perspectives? They don't really have a lot of asset other than like technology, which they have. I think they've gotten they are fast to the game. They have gotten to a scale rather than any kind of intrinsic innovative technology. They're not like an Uber, right? Uber has like a whole different set of technologies in it, right? But for TTD, I think it's a lot more of scale, but they're fast growth, right? So I think the challenge is always looking at growth companies, right? And to understand the concept of exponential growth. If you see a company growing at 30%, 40%, that means in 2 to 3 years' time, it will double its business. Right. So if the company doubles its business, then does it mean that it's going to double its value? Right? Are we going to see margins maintain? There's a lot of different kind of questions. Yeah. They're not dividend powerhouse. They don't give dividend, by the way.
Yeah, and then the last question here, and then we can move on to maybe your second stock or company that you would like to talk to or talk about.
I'm doing anything differently with this market situation using SMA and EMA. What is SMA and EMA? That's
I
my
think this guy's
support.
more looking at technicals, moving
Split
averages.
my money. But now everything broke through every support line. Support line. Okay. No clue what model to use. Okay, I'm not technical. This is something that you need to know. I'm more fundamentals. So I don't time the market. I was pretty shocked every morning when I wake up. It's like, ooh, 10% down, ooh, 10% up, ooh, 5% down. So every day it's like opening up a new present, right? So the good thing is I'm not technical. I'm not concerned about short-term day-to-day fluctuations. I do a bit of options, but yeah, not technical that way. I'm sorry, I can't help you.
Yeah.
Mm.
Cool. So that's kind of all the questions we have right now. So is there another company that you had in mind that you would like to kind of
Did
brief
we
us or introduce us to?
did we talk about Roku yesterday?
No.
Mm.
Roku. There we
Roku,
go.
love that company.
Yeah. So this is actually one I've started, like it popped up on my radar maybe 3-4 days ago.
Mm-hmm.
But like I don't really know much about this type of industry. So could you kind of help me understand what this is about as well?
Okay, essentially, all of you guys are online these days, right? We no longer watch cable, right? So no more Astro TV, no more those kind of stuff. Even if you use TV, you watch Netflix, you watch YouTube, all these different platforms,
Yeah.
right? So you realize that streaming is becoming more and more of a thing. Everyone is going there for very good reasons because you get to choose your content, you get to see what you want to watch, you get to skip, you get to reverse, you get to pause everything, right? So a lot of control as to what you can watch. So that is good. And all the big boys are trying to come into the business, right? Disney is in the business, HBO, right? Amazon, Netflix is the giant in the business. So everyone is in the business of streaming.
Yeah.
And everyone is struggling with one thing, content, right? So content is very expensive. And you see, if you go to Netflix's financial, you see tons of bleeding. Although they're growing, but they're spending a lot, billions and billions of dollars. I think they spent 20 billion. There are 20 billion in debt, long-term debt as of now, just to fund all these, Orange is the New Black, all those kind of content. Clearly, I watch Orange is the New Black. Yeah, all this kind of content. And good that they're winning Oscars, but they're not making money, right? They're not like profitable in that aspect. So, which is why if you are trying to make money in the streaming space and you're betting on streaming as a business, I would think you want to look at something like a Disney because Disney has tons of content, right? And they can do all those kind of stuff. But besides that content aspects of things, you realize Roku is an interesting spin-off from Netflix. Right? Actually, it's one of the co-founders, I think one of the earlier people of Netflix. He came out and he decided to build this whole hardware business, which is Roku, right? Essentially, it's like an Apple TV, right? Apple TV, so it's like Roku TV, right? But Apple TV only streams Apple stuff, and a Roku TV does everything. So it's like they integrate with everyone, and they have since pivoted into a platform kind of business, which means like anyone can start their own kind of broadcast channel, Comcast, or like a YouTube channel like TYT or BuzzFeed, or if they want to go into streaming, they can join the Roku platform, right?
Can we do it?
We just need to fund. We need to funnel a lot of content, right? So you need to be exciting enough. So the Roku platform allows all these kind of players to open up their own streaming channel, essentially opening up a Netflix without the whole technological infrastructure of setting up Netflix. So entertainment companies can do what they do best, which is entertain, and Roku will settle everything. Right. So I think that is where it is. Right.
Okay.
And
But how do they make money? And as a user myself, then or why would users choose Roku versus like Netflix, for example?
Okay, three things. So one thing is Roku used to sell a hardware device, right? Now they're integrating it with televisions. So 1 in 3 televisions in the market in the US have Roku attachment in it now. So you don't even need to buy the extra device. They already built the hardware into the television. All right, so that's one thing. All right, so I think more and more people will want to enjoy a larger screen and the comfort of a sofa, with it, whether it's a projector, whether it's television. We don't want to watch cable, but we still want to enjoy that kind of TV kind of experience. Excuse me. So yes, Roku is going down the hardware infrastructure line. That is cool. They will increase accessibility for all of us. That's nice. If you don't spend on Roku TV, you don't buy a TV, you can still buy the device. So that's one thing. Second thing is, I think Roku has a subscription model as well, right? So if you subscribe to Roku, you get access to like Disney Plus, you get access to a lot of different kind of platforms at a fixed price. So Roku kind of integrates all these different platforms to come in, right? So that is good also for consumer end, right? And number three is Roku uses licensing, right? So they have all this tech infrastructure and they license that to all the different media platforms that want to, stream and make their own kind of stream network, right? And I think that is becoming a huge business. I think it was 70% growth. I can't remember exactly, but that is growing massively. And as more and more people are coming onto the Roku infrastructure, more and more content people are funneling through. So as more and more content is coming through the Roku infrastructure, then you'll see probably more and more people will sign up for Roku kind of subscription. Right, so and they're starting to expand overseas beyond the US. So I think that is it's pretty cool.
Okay. So right now, like, if they're not really doing any sort of advertising revenue either, or anything like that, right?
They do have some internal kind of like the other platforms that are on them. They can do ads.
Okay.
Yes, but they don't really make money from ads. Mostly streaming and hardware and subscription.
Interesting. Yeah, because I guess from just I don't really know much about the company right now, right? So I can't really say much. But I guess my first question, if they're going down a subscription route, the way I look at it is people will kind of choose their default entertainment, right? So for Disney, like why would Netflix ever want to subscribe to or be on Roku? Right? Because then they'll be like, I'm like, now I'm not getting as much, or I don't have full control of the user, and now Roku has control of that user.
Good question. I'm not sure exactly how things work here in Malaysia, but in Singapore, there are a few telco companies. Like they sell like Wi-Fi or like data only plans, but they don't actually own the infrastructure, right? So they're just resellers.
Yeah.
Right. So I think that's something that we need to realize, that it's very prevalent in the market, because if you want to localize in the industry, you gotta work with the local people and you gotta let the distributors make some money, right? That's a reality of, because it's complex in different local markets, right? And having that first mover advantage kind of helps in the business. You will also see Roku reselling to other people in different aspects of the market, right? That's kind of how it works. The ideal for a lot of direct to customer kind of businesses is everybody hope that they can actually go direct to the customer, so they can bypass all the middle people and then just suck out all the profits. But on practice, it is just not the case, right? Even a lot of enterprise softwares, a lot of a lot of digital platforms, they look like they're going direct, but a lot of times they're going to a lot of resellers and distributors, and there's a whole chain around it, right? So like it or not, this is not a one guy wins all kind of business, right? There was a short period of time everyone was like, Netflix is gonna kill everyone, Netflix is gonna kill everybody. But the reality is, some people like Netflix, some people like Game of Thrones, they go on HBO, some people like different things, right? And I think Roku has a kind of integrated hardware infrastructure and a kind of integrated licensing platform to allow a lot more media content to drop the cable and go on streaming.
Okay, cool. Yeah, so that's one of those companies I'll be looking at over the weekend. Hopefully next time we talk about Roku, I can actually have a more intelligent conversation around it.
Cool. Happy to do that.
Yeah. Okay. So I guess we're just coming up. We're like, 45 minutes in. Do any of you just want to make sure we have anyone here? Like, do any of you guys have anything that you would like us to like look into or talk about a bit? Assuming that either Reggie or myself have some experience with or some basic understanding of what these companies are. Or is there anything else that you would like us to kind of cover? Please let us know, because this is definitely meant to entertain you guys in different ways.
Yeah. Someone said he basically said you're not interesting. Is he trying to say I'm not interesting? I'm not entertaining enough. But yes. Any interesting companies on your end? Have you seen any things that you're looking at?
Yeah, so TTD was definitely one of them.
GTD. Oh, sorry.
Yeah, let me actually pull up my little sheet here.
Oh yeah, I think a lot of people, there's always this discussion between index investing and picking your own stock.
Yeah.
Right. So I would think for most people, indexing is good enough. You get average 5 to 6% growth. It's good. You double your money in about 10 years, which is good. Don't get me wrong. But as you go along, if you are super keen on picking stocks, it's going to be fun and I think you can get a little more returns if you become pretty good at it. All right, so you kind of can
pretty big if though, right?
Yeah, it's pretty big if, and you kind of can do more integrated. So okay, a lot of people, they start with indexing and then they start to like add a little bit, like buy a little bit of Facebook, buy a little bit of Visa, buy a little bit here and there to like add on to whatever they're trying to do. I, on the other hand, I started with picking stocks and I'm going to add some indexing. So because I start to see the value of broad-based kind of exposure. Like I want to get some exposure in Chinese market. I want to get some exposure in like maybe in the European market or the Japanese market. It may be, I'm not sure yet. And if I want to get exposure and I'm just too lazy to look at everything, then I could just buy some indexes that cover those markets and kind of grow and find opportunities in that sense. Right. So I think there is a room for indexing, and there is always room also for picking stocks. So see for yourself. There's too much of this or that, yes or no, in the retail investor space. I think a lot of times we got to look at what is the percentage. I think that is more important than absolutes. Yeah.
Mm-hmm.
Yes. Sorry. Back to you.
Yeah. So one company. I think we mentioned it before, but Booking.com is definitely my go-to at this point. So the reason I'm interested in this right now is because as we all know, the tourism industry has really been taking a beating, right? And so a lot of these companies have dropped significantly. Like we're looking at like 60 to 90% in some cases, right? Booking.com is not, or it's kind of in that travel space, but they're more of a tech play, right? And I think the biggest reason why a lot of these companies have dropped like 60, 80, 70, 80% is because they have a lot of debt, right? And when they have a lot of debt, it means that they have a lot of debt obligations, and that those debt obligations don't just disappear when you don't get customers, right? And so therefore, like a lot of these companies are actually facing bankruptcy. Booking.com, because they don't actually own any assets, they don't own hotels, they don't own physical buildings or anything like that. They have no real debt, right? And all they really are is like they're kind of like the Google for like booking hotels or booking trips or whatever, which is a huge opportunity. Like when people stop searching, like they just like I think their biggest expense is actually paying Google to advertise on their platform, right? But when people stop searching, then obviously their expense from that perspective also drops. And for me personally, like these guys are also sitting on I think $6 billion in cash.
Yeah,
which
super rich.
Yeah, and like they don't. I think their current liabilities, so everything that that's paid this year, as of last annual report, was like 5 billion or so, right? So they're still sitting on $1 billion in cash that they can easily take to, buy out some of their competitors, right, and grow even bigger because of that. So yeah, and that's the one I'm really looking at. They've definitely passed that initial threshold of, it's time for me to, I can start getting in. Of course, considering it's $1,000 a share or 1,001 here a share, like, I'll probably be getting like one share each time and just slowly like inch my way in. But I am hoping to really stockpile this guy if it goes down any further.
Yeah. I think a lot of people, okay, you're just talking about $1,000 a share, right?
Yeah.
So a lot of people have this misconception that, a cheaper company, it's good. Like it's very easy for $1 to become $2, right? That is what a lot of people think, but that is not the case. If you play with pennies, you may lose your pennies, right? You want to find companies that have a decent size, a decent number, and you got to realize that it is priced at $1,000, but the overall company may not. How much is the valuation of like Booking?
48.35 billion market
So
cap.
the whole company is worth 48 billion, right? It's and $1,000 a share is just kind of their decision to benchmark at a certain price, because at a bigger price there's lesser speculation. That tends to be the case. And there are other companies that are like very cheap. Like I have a friend who told me that like he buys those kind of super small biotech pharma companies. I'm like, oh my god,
So I put up Bank of America here just for an example of much cheaper. So if you could just kind of continue your thought process using Bank of America as an example.
Yeah. So how much is the valuation, the BAC?
According to this chart here, it says 975 or 971 million market cap.
Okay, yeah. So what I was trying to say is the whole of the Bank of America is worth $1 billion. Like the company itself is worth $1 billion, right? And it doesn't mean that it is a better company or it is a worse company. It just means it's valuated as a much smaller company, right? And it doesn't mean that like at $20 over, then it is easier to go to 40, right? It doesn't work that way. I usually want to look at like mid-sized companies, about $10 billion. I think they have room to double up, triple up. Not impossible. Yeah, at that kind of rates.
Yeah. Anyway, so that's definitely the one I'm most interested in. That's in the price range of, or that has fallen enough to the point where it's looking very appealing.
Someone asked, do you have like a watch list? Yes, I have a watch list. And why? Do you mean like why do I have a watch list? Because I just have a watch list. Huh? It's just kind of how I observe the market, and if I see something interesting but I'm not ready to buy for whatever reason, I'll just kind of add it to the watch list, and I will continue to look at it and see how things goes. Yeah, I don't mind sharing. I just don't know how to share. Yeah.
Yeah, I think just going to the why of having a watch list. If you don't have a watch list, you're being very reactive, right? It means you don't know if something, what opportunities are actually opportunities and what opportunities or what things are just like duds that are just falling, right? So by having a watch list, by preparing beforehand and having like clear ideas of like, these are the companies that I understand. These are companies that I have kind of a rough valuation of where I think it could be in the future. And these are the prices that I'm interested in getting into. Then when the news comes along, then you're not just like freaking out, trying to figure out, what do I do now, right? Is this the time to buy, right? Because you've actually taken that time beforehand to really understand what it is that you're going to be buying and when you will be buying it or what prices you'll be buying it at, right?
Yes. What do you have in my watch list? I don't mind telling you, but I'm not sure if I tell you, you will actually benefit from it. But I can share with you some companies. Do we have time? We can continue to talk about some interesting companies.
Yeah, so let's let's move out of the tech space. Let's kind of go back to the stuff you were talking about in China, because I think those are definitely some really interesting opportunities.
Mm-hmm.
So what's the first thing you want to talk about that's China based?
China. Oh wait, that was Trump. Sorry. Wait, let me see what do I have on China. We talked about TCOM yesterday, right? We talked about JD.
Yeah, actually, let's go back to TripAdvisor Trip.com.
Trip.com. Have you studied them yesterday?
No, no
Mm.
time. Yesterday was chaotic.
Yeah.
So Trip.com. I think we have a few new faces here. So why don't you just kind of give a quick overview as to what they're about?
Essentially, Trip.com, they own Skyscanner, they own Trip.com, they own Ctrip, they own like Qunar. So they are like the Chinese version of Booking.com. Essentially, that's how it is, right? And I think they are making like close to $1 billion these days. And the Chinese are increasingly more and more affluent. They're traveling more and more, right? So there is a huge value in buying into something like that at this point in time when travel numbers are not amazing. But locally, the Chinese, they do travel locally quite a lot. So you should see numbers pick up again, right? But in the long term, I think it's good. I do not see a scenario where China rolls back into the slums. Okay, let's put it this way. Right, I see a scenario where the world has a few dominant players, and power is more and more distributed across the board, and China will have an important seat in the global discussion. So the Chinese economy should continue to rise. Whether it can break through, that is another question. Changing its model from like a manufacturing base to like innovation, high tech economy. That's another thing. But the Chinese are getting richer and richer, so they will definitely travel. And TCOM is one of the companies that I think people should have in their portfolio because it's like the Chinese Booking, right? So if you like Booking, you should like TCOM. I think that's pretty good.
Yeah. I guess my biggest question there was, what are like the big booking sites, the online booking sites that the Chinese use?
It's all this.
It's all TCOM, right?
Xiecheng and Qunar, Ctrip and Qunar, they're all part of. They're part of this. Yeah. So they started as Ctrip. It's a Shanghai-based company, and they bought their competitors. So yes.
Oh, so they bought their way into Trip.com in the past, right? Because I'm looking here, it says they IPO'd back in 2003.
So I think Trip.com is a spin because the whole brand looks the same. Exactly how I don't remember, but it looks like a spin-off from Ctrip. So Ctrip is the Chinese app and the Chinese platform, and then Trip.com is like their overseas kind of stuff. And they had a competitor called Qunar in China, and they bought over that guy. I think they bought over Skyscanner, and yeah, so they are essentially like Booking, from Priceline to Booking to Kayak. They buy all these integrated platforms, and yeah, that's kind of how it works. And a lot of people probably didn't know it's that at the back end of a lot of these travel sites, they actually cross-pollinate a lot. A lot. So it's like Ctrip has all these inventory. They have already signed contracts with all the different Chinese hotels, local travel stuff, everything. And then they can actually integrate with like Booking.com or TripAdvisor. And TripAdvisor can help to sell all these things and get a cut out of it. Right, so there are a lot of integration in terms of product integration in the travel space, and they cross-pollinate. So I think that is something that we need to be aware.
Yeah. So I guess final question about Trip.com. So where was I going with that? Is Trip.com the full company? Like how AirAsia is the full company of all the different subsidiaries, or is Trip.com just a part of a subsidiary of a bigger Chinese like private institution?
This whole thing is they are one entity, right?
So Trip.com is the holding company.
Yeah.
Okay. Yeah, because that's important to know, because if it wasn't, then we're definitely not potentially like benefiting from all the Chinese tourism, right? So this is just going back to our other chat, and we do have a few questions here. So,
Okay.
Ping on insurance.
Ping An. I didn't study
Yeah.
Ping An, but that's a good question. I will get back to you. Insurance
Okay.
companies are always great companies. It is so everyone understands how insurance companies make money, right? They make money from essentially bearing your risk. So more often than not, they have their actual team at the back to like evaluate what is the best price, and it's a very refined sector. You don't see insurance companies going bust. It's very tough. In fact, okay, I mean,
Beg
like,
to differ.
okay,
I mean,
okay.
as someone who's read a lot of the Warren Buffett newsletters, or like all his shareholder letters from, beginning of when he first did it,
Mm-hmm.
he talked a lot about how a lot of these insurance companies, some insurance companies, they become very, very greedy, right? So they want to win over businesses, so they offer things that have small chances of happening, but when they do, all of these companies end up going bankrupt, right?
Yes.
So I wouldn't say that they're fail proof, but I do
Okay.
think they're a very good industry to be in because of the cash flow.
Yeah. Okay. I take back my words. I don't think they're fail proof, but yes, they have huge cash flows, and Ping An is a huge insurance company, right? And they are backed by the government in a way or another. I think one of the founders was Hu Jintao, Wen Jiabao, the previous premier, right? So or one of their family members. So you get it, right? It's a Chinese business owned by very, very influential people. Right, so it's a very, very cash rich business, and you see more and more insurance companies these days. Like I have not studied Ping An, so I'm not sure, but you see more and more insurance companies these days taking that extra money that they make and investing in other places. Right, so they make all these premium and everything. They don't let the money sit around. They do a VC arm. They buy other companies. They buy different businesses, and it's a little bit like a lot of people don't realize in Buffett's repertoire, he does a lot of this, right? He makes a lot. Yeah, he makes a lot of money from selling insurance, and from there he takes his extra cash and just kind of funnel it and buy all these other things. Yeah.
Yeah, Berkshire is like the underlying mechanism of Berkshire is really like
insurance. Yeah. So
taking all these cash premiums now, investing it in a way, and being Warren Buffett, being able to succeed doing that, and then being able to pay out way out in the future.
Yeah. So it's not all about value investing, guys. Don't be oversold by those like value investing gurus. There are a few things that Buffett does that people don't talk about, right? And I'm actually going to record an episode on that, but I'll just tell you. Okay, so one of those things is, yes, he makes a lot of money from selling insurance, right? Like what CK just said, right? So CS just said. So they make a lot of money from selling insurance, and they take the insurance to do value investing. That's one thing. Number two is he stays in Omaha, Nebraska. All right, is that that's a place, right?
Yeah.
He doesn't stay in New York City. He doesn't stay in LA County. So he's making all this money, but he's spending very little, right? Relative to all his other Wall Street friends, right? So over time, it helps him to compound. Right, a lot of people don't understand that bringing down your expenses is as important as trying to be smarter with investments and raising your income, right? And a lot of people also didn't know that his dad ran a small brokerage company, right? So he was in the right place, and somehow he got some exposure. It's just like how Bill Gates was part of the early IBM people, and all these people they had early exposure, and they got the chance to understand that thing. And you cannot discount that. Also, you cannot discount that he had a lot of aggressive acquisition. When people were going bankrupt, right? Or like Goldman and all these other different companies that he bought along the way because of very, very aggressive and acquisition processes. Right? So it's not all about value investing. Don't be oversold by it. But value is a good place to start.
I mean, I would argue that, but I think we could save that for some other time. I think a lot of what Warren does do is value investing at its finest, and then taking that to do other things, right? And of course, like fundamentals of value investing is there, and then adding on those additional layers over time. Anyway, that is besides the point. So we've hit over the 1 hour mark.
Oh, there's a lot of talk.
How are you feeling?
Good, fine. Yeah. Very excited. Yeah. And
okay, so why don't we talk about one last Chinese one, and then we can wrap up today.
Sure. What do you want? The obvious one? I think we can. Do you want to do the obvious one like Alibaba?
Sure. Sure. Let's talk Alibaba.
Yeah, let's do Alibaba. It's it's obvious guy in the business. So everyone knows Jack Ma has already stepped down from the company, and he has handed over to like some people that you may or may not know. Probably you won't know, but either way, they have a huge stronghold in China. And actually, their biggest business is not selling things, right? Their most exciting and most lucrative business is in finance, right? It's peer-to-peer payment, P2P. It's like a Grab Pay. It's like it's like a, what do you call it? Touch and go pay here, same, right? So it's Alipay, and probably they were the earliest people that came up with this thing, right? So what Alibaba did was they got you to open a Alipay account, and then they got you to top up the Alipay account in exchange for interest in the earliest stage, right? I think they were giving 3% interest on whatever you put in. And because so many people shop on Taobao and Alibaba, people were okay to top up, because after that, you then use their money to then shop on Alibaba, relevant platforms. Right, and from there it scaled, and of course they have since removed that direct interest. I think now they have like N finance to allow you to invest or do other things, right? 蚂蚁支付, right? So a lot of people don't understand the beauty of this business because it keeps the money within the company. So what happens is, like, if you live in China, you can literally go out with a phone, right? You can go and buy the bao from the auntie downstairs, right, and just pay her with Alipay, right? And what happens is on the back end of the company, they're just digits, right, transferring from one account to another account. Doesn't matter, but the money doesn't move. The money stays in Alibaba's bank account, right? Which is why the Chinese government was very afraid, because they were getting so much dominance, and I think Alibaba held a lot of cash, so much so that they can sway currency rates, they can sway businesses, so easy for them. That's why the government kind of did some takeover, they did take over the company. And that's kind of where it is. It's great business. Some people say if you buy Alibaba, essentially you get exposure to the whole of China, right? So it's just not exactly wrong, because you get e-commerce, you get payments, you get finance, you get they have insurance also. It's everything like what Grab is trying to do, and they have like a huge VC arm that is investing all around movies, everything. So yeah, if you buy Alibaba, you are just betting on China in some way.
So I think you were kind of like, you almost sold it until you said until the Chinese government took over. What does that mean?
So it is a long-standing discussion between like capitalism and socialism, right? And don't be sensationalized by the news. Socialism is a critique of capitalism, right? So Karl Marx actually critiqued capitalism and in his whole social view, right? So socialism cannot exist without capitalism, right? It is not a this or that. It is a this and that, right? So you realize that globally in the markets, some people are more capitalist, some people are more socialist, and of course China is more socialist. And there is always a fear that when government institutions take over a business, it becomes more rigid, it's not as nimble, and it may lose out in terms of its execution and deployment of capital, where to deploy, because they have a lot more red tape that you need to look out for, and all these different things, right? So then it puts a question mark as to how things will work. But yeah, I still think Alibaba is a decent buy. Yeah, I'm just not sure if the future will be very bright if the government takes over. Yeah, it's kind of where it is.
So I guess when you say takes over, does that kind of, they take over management in a sense, right? It's not like they're like buying out shares and become like the major shareholder or something.
Yeah. So okay, I didn't look into this deeply, but I think Jack Ma surrendered his shares to 5 shadow shareholders. Like, you don't know these people, and of course they bought it from him. That's what it says. Exactly, no one knows. And yes, they put their own management into the company, right? So I'm not too sure if you're comfortable with that. If you're comfortable with that, so be it. If you're not, then it's also okay. I can understand why. But some people say buy Alibaba is like investing in China. So it's not wrong per se, because it shares the characteristics of China these days.
Okay, and so that's it from the stocks perspective. So we have one last question, and then we can wrap up here. So, what English language website do you look at for the financials of Chinese companies?
Okay, so if you want to find any Chinese companies that are listed in the US, that'll be very easy, because you just go to Google search and you put like Alibaba, and you put 2 words at the back: investor relations. They send you straight to the English page, right? So, but if you're trying to look for any companies that are in China and only listed in Shanghai or Shenzhen, then you're gonna learn Mandarin. I'm sorry. As of now, I don't know any platform. It's just like why I'm not in Japanese companies or like Korean companies, because I just cannot understand the language at this point in time. Sorry.
Okay. Perfect. So with that, I think we are done for today. Thank you guys so much for joining us. Thank you, Reggie, for being the main talking head here today. Really appreciate you sharing your thoughts and knowledge on all these different companies, and I hope that everyone got something out of it. Yeah. And so tomorrow, we will be going live every day during this whole restricted movement order, which is what the RMO stands for. So tomorrow we're actually going to try going live at 5 p.m. instead, just to see what it's just to see if there's actually a big difference between just the attendees. We don't really have a topic yet, so if you guys do have any ideas, please let us know what you would like us to talk about. We're okay talking about stocks, but we rather not just only talk about stocks, right? I think there's a lot more to personal finance than stocks, and the investing side of things is important, but you need to have a lot of other things in order before you can really start talking about that. Right? Yes. So maybe tomorrow we can talk. We'll start there. Like what should we have in order before we actually start looking at even investing? Okay. All right. Thanks a lot, guys.
See ya.
Have a great day. Enjoy your time at home.
Enjoy your RMO. See ya.